And I am back with Oracle, ORCL. And what's up with this one on the New York Stock Exchange? Oracle has been doing stage one. Okay, I have my 5 years worth of data, monthly candle, old habit, weekly candles, volume, RSI, and those are my 3 needs, and the SMA, 30 SMA. 3 needs to be able to do a triple confirmation. Stands stage 2s and stage 4s, triple confirmation. And let's just see, they just come back over and over and so back in the days, what did Oracle do? Right here. I added this the clouds, the Ikimoku clouds, and they really help visualize support and resistance. So right now this is the support. With the bottom line here, the last of the support, and you see it just bounce back on top, working its way through. And if the price action is above the green clouds, you're generally in an uptrend. If the price action is below a red cloud, you're usually in a downtrend, clear downtrends or clear uptrends. Other than that, then you're in a either stage 3 or 1, some consolidation, some sideways move, no clear pattern, no clear direction, other than you're just waiting to see if you're going to continue up for stage 2 or break down for stage 4. And let's just look back. I've been doing these Secretwars episodes, revisiting Stan's framework, because that's the book that made me save probably all my NAV, because I was just doing penny stocks. I had no knowledge of risk and money management, and like most people just starting off, I gotta follow the popular ticker, or I wasn't even following popular tickers. I was following penny stocks, man. That was just crazy. And Stan covered in his book Secrets for Profiting in Bull and Bear Markets, covers pretty much everything you need to know. If there's only one book to read, that's it. That's the only one. Covers the stage analysis, which is great for writing momentum, a trend, protects you with sell stops, talks about money management, and with that, you're golden. So much kudos for Stan for writing that book. And you read it once, you practice, and you read it again, then you notice new stuff in it, and eventually the more experience you have, the more you get to having Stan's experience when he wrote the book, then the more you absorb everything, and you understand the nuances and the details. It's great. You could always complement that by going on stageanalysis.net, where it didn't exist back in 2006 when I started, or 2008 when I started Stan. And now there's just everybody who's ever done Stan there. You go and post there, and you hash out your questions, figure it out. All right, I'm talking too much. Let's see what was happening. Was that a breakout candle? And the RSI was... All right, that one right there. RSI was starting to go up. Midway point, going upwards right there. So here you had that stage 2, traditional horizontal line above the 30-week moving average, going upwards. You got those clouds under you, so that's the support. No resistance up here, you're golden. You get that super high volume, twice as the average probably for the previous weeks, or just about. And then you're just off. Pull back on the low volume. That's what you want. 1, 2, 3, 4, 5, 6, 7. It's just perfect. Within 1 to 3 months, good breakouts have pullbacks. And I am starting to see it time and time again on those A+ setups. On breakouts, you usually have a pullback. On breakdowns, you have pullbacks, but not as frequent. And if it's on low volume, guys, don't stress. You entered here. There's no rush to jump the gun. I know Stan, I think he, even on the daily candle, he makes some provision for you to go in, and then you wait for the weekly candle close, and then you see if there was enough volume, or else you bail. I'm more the patient type. I've learned to wait for, if I'm looking at the weekly chart, I'm going to wait for that weekly candle to close. And I don't mind seeing the price action go a little bit up, because knowing Stan's system with the pullbacks, even if I enter here at the week of the candle, I'm pretty sure I'm going to have a pullback. And knowing that something's going to happen, it alleviates a lot of the unknown. Fear stems from the unknown. And if you have too much fear, then you just go in panic mode. So right now, let's say you would get in the stock. The next week, oh man, it's going to skyrocket to the moon. But stocks don't do that. So once you start drilling down to your head, makes it easier to say, okay, then there's a pullback. So that's 2 months later, and then you say, I didn't choose a good stage 2. But just remember, you did choose a good stage 2. Why? Because you had the triple confirmation, RSI going from negative to positive territory. You had the volume. You had the horizontal breakout line. You're above the 30-week moving average. It's going up, and there's no resistance ahead. So you have the trend on your side, and that's all you need. So all zigzagging action, that's always going to happen. So if you get to control that, you won't pull the trigger here uselessly. You're going to stick with your trade and just move the sell stops according to Stan's way. Here maybe for if this is the bottom formation, maybe for traders, you would have entered 4 to 6% under the breakout line, under a round number. And if you're close to the 30-week moving average, I would just put it right under just to protect yourself even more. I think investors would have started the same place. And then there you go. All right, you're in. Pull back. Price action starts going back up. Start moving your sell stops. And go up the price. Pull back. Sell stop. Traders, investors. Pull back, price action goes back up. So you would have moved a few times, and then you got that trend line. 1, 2, 3, 4, and then you would have exited half of your position here for traders and investors on that breakdown candle. And the remainder when either when you hit the highest sell stop, or you moved it, or where you breached the 30-week moving average. So both investors and traders would have been out here. And what happened? Well, look, another case, and it's usually like that. Trendline violation usually means the beginning of a stage 3, imminent. Not imminent, but eventual stage 3, or the start of. And then when the 30-week moving average is broken, and then it's definite stage 3, and then you go into risks of going into a stage 4. And here the clouds, they really, really help, because right now, check this out. Let me remove the clouds. Bye-bye. No more clouds. And let's say, there you go. So let's say mistake. I would have done this. I would have been in. I would have wrote this. Yay, I'm the best. And then I'm orcl. Stage 3. I'm going to get a stage 4 soon. And then what could have happened? Okay, you draw your lines. The market, sometimes it just needs time to start morphing the chart, creating patterns. And then, breakdown. Yeah, this candle here. So I could have said, okay, we're stage 4 breakdown, below 30-week moving average, flattening out, not going down right now. The RSI has started going down, midway point going negative territory. I have the volume. Always good to have volume, even those two candles, more than twice the average volume. And okay, I short, but there's one thing I didn't account for, and Stan mentions it in his book, but he didn't really give tools. He just says, well, Look for previous close support. But when you see the triple confirmation right here, you don't really look for that. You say, it's far enough, or your brain plays tricks on you. And here comes the clouds. So with the clouds, it gives you support 26 periods in advance, but it starts phasing out also the previous. So slowly but surely, you have the cloud around where it's still the most valid underneath you. So if we're to stage 3 longer, all this support from these candles here would have moved up eventually. And if we have a consolidation pattern of 26 patterns, 26 candles, then there's no more support. There's no more support. So when you have a breakdown, then it goes full steam. Right now, you're going to start falling to support. All these candles going up. That green cloud's going to keep going up and up. So if you enter here, there's good chances your price action is going to start slowing down there when you start hitting that cloud. And what happened? You're in the cloud, and right here, bam, support. It resisted and brings you back up. So if you want to really increase your chances, we could have almost told Stan we need the quadruple confirmation system. You need the volume, the RSI going negative territory, trending in the direction you want to do the move, and break of the pattern below 30 moving average. And no support, immediate close support coming in that you have to work your way through. So that's really a lesson that I'm always looking now for my A++ setups. When Stan calls it A+, I'm going to do A++, no cloud support or no cloud resistance. And you'll see I've done a few other, been doing a few Secretwars episodes, and those A+ setups don't have. Here you go. So now that stage 3 became a failed stage 4. So you would have lost just 1% of your NAV because you did the risk and you did the money management. But with the cloud, you would have saved 1%, and that 1%, you're going to risk it here on this candle here. You had the volume right here, more than double the previous average for the 4 or 5 weeks, going upwards, and that's it. There we go. Then there's no resistance above. All the supports under. And that's a slow starting stage 2. Not really taking off. Oh! And finally, that stage 2 did not really pan out. You would have been triggered out right about traders and investors. Depends where you would have put your pattern. But your sizing would have been equal to 1%. So eventually, after this failed breakout, you would have been triggered out around here. Or even the traders would have been, around right here. Traders never stick around when the price action goes under the 30-week moving average. So that wasn't too good right there, but it was a play to make. Stan says the system is not perfect, and I believe him. Sometimes you just don't get that continuation or breakout. Are there clues? See on that pullback, price goes up, and it pulls back with relatively solid volume. Not a good sign. And what's happening today now? Let's move along. Then it enters stage 4. See, now this breakdown right here is a little better. Let's try. Right now, you had some support. That green cloud is still there. You had that crazy volume on the breakdown candle. did we have how's the RSI looking? Yeah, so the RSI is going from midway point down to negative territory. And we had that candle. Or you could have actually, maybe you could have waited for this one if you want to make sure that you went through the cloud. And this candle closed right below the cloud, and then full steam ahead. Down it goes, stage 4. And right here you have your trend line. 1, 2, maybe this one 3, and on the fourth one break. We have the 30-week moving average. Traders, investors out right here. Or let me just go back. Goes down. Right here, traders would have put their sell stop. Investors above 30-week moving average on the pullback. All right, traders would have been out right here at this candle through their sell stop. And investors would have still been there. Traders would have put their sell stop right here after the pullback towards previous lows. And then the price action keeps going down, down, down. Here, pullback. Didn't quite go back towards previous lows, so you wouldn't have moved your sell stop. And right here, you would have been triggered off for the rest. What happens after trendline violation, 30-week moving average? Then you either go back into a stage 1 or stage 3. In this case, stage 1. And check this out. You wouldn't have not played this breakout because now you have all that resistance above. And what happened? The resistance, it just hammered down the price action, and that didn't really become stage 2. It just stayed around. So the stages and that fourth criteria, close by support or resistance, really helpful to save those 1% of your NAVs that you might lose on entries, on failed breakouts, save you time, and that capital could just invest it somewhere else. Okay, let's see this final breakout. That's going to bring us to right here you're above, but you don't have high volume or double, so you could have easily passed and say, I'm going to wait for maybe a candle with more volume. And you have it here on this candle. So you could have kept an eye on it because I don't trust this. There's no overhead volume resistance, but I don't trust this breakout. There's no reason to jump in if you don't have the volume. Just wait until you get a better signal. Price action goes up, traces back down, and then explodes again on this candle. And here you could have just said, okay, this is it. Markets decided that the breakout that's going to stick around is going to be this one. And it could have been a good place to enter. Some sideways action. Even here, another move. These are classic Stan examples. If you look in his book, these sideways consolidation, getting the price action closer to the 30-week MA. Breakout, another breakout on huge volume. This is a good place to enter. And after that, price action starts going back 30-week moving average sideways. And you would have probably got triggered out 30-week moving average violation or probable trend line. And that's what brings me to the stage 3 we're now at. And that's why I want to set my alerts for orcl. What is next for orcl? Always try imagine possible chart patterns even before they're formed. I always start from the extremities, identify the support, the resistance, draw horizontal lines, put in some alerts, and eventually either they fill out or they don't, and just keep an eye on it. So right now, what's going to be hard for a breakdown, for orcl to go into stage 4, it's going to have to go through, price action has to go back and break down this 47.50 line. And trend is going to have to go down through this support before you go in. So what could I imagine right now is maybe when we get around here, when the previous support here starts evaporating, maybe orcl now, I think it's going to probably maybe consolidate like this. And if it's going to be a mature for breakdown, for stage 4 breakdown, is going to be when we're out of this. It could go down here, but we're not going to play it until the candle closes below that support. Well, as for stage 2 continuation, well, it's even easier because there's no overhead resistance. If ever we have a breakout on a high volume, see these candles, there's no green candles of really abnormal high volume. So if ever we have a big green volume here, we're going to play it as a stage 2 continuation. Right now, closer to stage 2 continuation and stage 4, use a little bit of your imagination and see that we're quite a way off before orcl breaks down to stage 4. All right, I covered a couple of things today. And yeah, keep orcl as a stage 2 continuation pattern. All right, thanks guys. See ya.